to Weekly Market View. I'm Nick Lewis, I work on the dealing desk, and I'm here with Bill Hubard to talk about the markets. So, Bill, let's start, I guess, with GDP came out today. We seem to have avoided a triple dip. Is that good news? Is that bad news?
I was in the Bloomberg consensus. I was at plus 0.1, but I mean, you're talking plus 0.3. I mean, it's not plus. It's not 3 plus. Okay, and I also think the simple fact is, if you look at the history of, we'll have the second estimate and then the third estimate. It's normally plus or minus 4. And I think, yes, we got plus 0.3 in here. But one of the things that's worrisome to me is construction. Still was minus 2.5%. Also, with sterling now at 153, 154. What is this going to do to a very weak export-driven market? I think all it does, today's numbers, it just means that Mervyn King will not have a chance to implement quantitative easing before he retires.
So talking of Mervyn King, then, I mean, Bank of England, much activity before the new guy comes in, before Paulson turns up?
I wouldn't think so. But, before we got these numbers today, I was sort of in the 45 to 50% probability that, next, at the May meeting, when we do get the new inflation and growth forecast, there was the real possibility of maybe another 25 billion. But I do think today's numbers will at least give Sir Mervyn the chance to say, well, Mr. Mark Carney, this is your baby now.
Sure. And yes, of course, it's ECB and the NBC meetings next week. I mean, have you seen much movement from there?
Well, I started the year feeling that we would get at least one rate cut from the ECB. Then all of a sudden, when things started to improve and the euro went 134, 35, 137, I basically said, well, I better keep my mouth shut and sort of eliminated any thoughts. But then, of course, 2 weeks ago when we had the president of the Bundesbank saying there's nothing wrong with an ECB rate cut, and horrific data out of Germany, the PMI numbers and the IFO numbers. Yes, I know the German finance minister said today Germany could grow at 0.5% for the year. Well, if Germany's only going 0.5%, and we saw the horrific Spanish numbers, etc. I'm 50-50 for next week, but I do think the ECB will wait until June, because then we get the revised forecast for both growth and inflation. But I'm also now feeling that we could possibly get 2 rate cuts from the ECB this year.
And so how about Italy then? I mean, that's been an interesting thing. I think you see bond yields actually below 4%.
Yes.
I mean, is it a good news story?
Well, I think, but one of the things you got to like, I don't mean to be frivolous about this, but Spain and Italy, hey, viva Mexico! I mean, it's one of these things where as quickly as it goes viva, yes, it can collapse. And I think one of the things, though, it will be an improvement. I mean, I think it's at least a situation where we won't have another election. We got rid of that comedian, and we do have, now his minister basically has some family experience in dealing with the Italian government. And I think one of the things that we will see, I mean, I do think that we will start seeing some chit-chat with some of our northern friends about this austerity. There's no way that Spain, Italy, Portugal, Club Med can even think about coming out of a recession or depression or stagflation or whatever you want to call it, when nobody's spending.
Yeah, okay, thanks. So, actually, one final one. Yeah. The 5-minute scare we saw earlier in the week of the Twitter news. What do you make of that?
Well, I guess I'm going to start showing my age, okay? I remember the old school. I mean, I started in 1971. Mike Bloomberg was still employed, okay? Rule 101 in the New York Stock Exchange was know your customer. We talked on the telephone. We met the clients. I mean, algorithms was something that we'd done in junior school. So I think one of the things which scares me is that, whether it was with Twitter or this or the other, I mean, you've got tens of thousands of people out there in their basement who spend all day long trying to hack into this and hack into that. I think the thing that scares me is what the Dow dropped 174 points. I mean, the Treasury 10
years back.
Yes, you see. So if you'd put on some sell positions, because as well as I do, a lot of people have been somewhat concerned about some of the levels that we've seen in most global indices, was stuff people were expecting to see on the 31st of December, not the 31st of March. So I think there probably could have been some protective stops that were probably triggered, both in the bond market and in the equity market. And I said, I guess that scares me. And again, I don't know, I don't do Twitter, I don't do Facebook, and one of the things, listening to the gurus on the television, talking about, I mean, Twitter has what, most of these things that you access, you have to have dual passwords. I think Twitter only had one. I may be totally wrong. But I mean, I think it's a situation where, you know, it's sort of, I blinked, or maybe I was in the jets when it all happened, so I didn't really see it. And it took me 24 hours. But if this is the new norm, you know, maybe it's time for me to retire.
Well, on that note, thank you very much.